Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES for the most part held above Friday's VPOC of 2177 and then made a fresh all-time high with a push into 2183. At this point, heading into the open, as long as ES can hold above 75 to 77, the buy side can maintain control. And today is going to be a test of Friday's breakout attempt. So if ES can hold above 75, 77, it would be a confirmation that the buy side is still very dominant and in control, and from there we can get a push into the 81 quarter to 83 quarter pre-market resistance and the 87 to 89 initial resistance zone. Now keep in mind that if ES is pushing beyond the 83 overnight high, then there is no hard resistance in the S&P. So at that point, it's simply going to be about the range potential of the day or one of the other markets hitting resistance. So 87 to 89 is an area that is very much within the range potential if ES holds 75 to 77. And then above that, we have resistance at 91.75 to 93.75, which would mark a range extreme given the recent levels of volatility that we've seen in this market. On the downside, a break below 75 to 77 would be a short-term signal that the market is now losing a little bit of that bullishness. It doesn't mean that it has to completely crash and fall apart. The next area, 68.75 to 71.75, can still attract buyers on first test. And that's really the breakout area from Friday. And that's going to be the bull bear zone. So even in the event of a short-term breakdown below 75 to 77, as long as 68.75 to 71.75 holds, we can still balance above that zone and perhaps make our way back up into the 81 quarter to 83 quarter pre-market resistance. So heading into the open, we are going to give more edge to the buy side. Now, in terms of warning signs or red flags, looking at the other markets, we can see that Russell failed to make a attempt at a new high. I mean, it tried to go higher, but it did not go beyond its high from Friday. So that's a bit of a warning sign, but it can continue balancing up here. And as long as TF is holding above 1226 to 1227.5, we know that it's simply balancing in a range, and it could still actually eventually go higher and make a breakout above Friday's high. NASDAQ, kind of a similar situation, simply balancing within a range. So these other markets so far are they're still holding Friday's breakout, but they're not quite as strong as the S&P. So we have to take that into account. So our bias going into the open is still more on the upside. It's still more bullish, but you'll note that today's short-term bias is marked neutral bullish. So it's bullish, but we do have to see certain things in the underlying internals in order to really press it on the upside. So as the market pulls back into perhaps 75, 77, you want to see the other markets maintaining their balances from Friday. So you want to see NASDAQ and TF, maintaining their afternoon balances from Friday, the afternoon ranges that were established in those other markets. And, you don't want to see downside momentum. So if the tick is holding below zero, that would be a warning sign. Because in order for the market to hold 75 to 77 and then continue printing fresh all-time highs, we are going to need to see upside momentum and broad market strength. So a rising advanced decline line and the tick holding above zero are going to be needed in order to not just hold 75 to 77, but actually go beyond 81 quarter to 83 quarter. And if we're not seeing that, or if we are seeing a lack of strength, not even outright weakness, but just a lack of strength beyond 78.5, could be a problem for the buyers in the sense that we may not be able to really go much higher, and that really affects the reward to risk. So 75, 77 is the first area that buyers need to defend, and then after that, we have support at 68.75 to 71.75. We have that swing low from Friday's session at 72.75. So those are areas where buyers can still defend, and those would still be good areas to initiate a long on first test, unless we were just seeing, major or excess weakness on the internals and with the other markets. but most likely 68.75 to 71.75 will hold on first test, and we'll balance there a bit before heading lower, even if we are going to go lower. So those were the main ideas heading into the open. So by default, our focus is going to be more on the long side, unless we see major signs pointing to a weaker market and a higher probability of a downside move. So by default, we are going to give edge to buyers and focus on longs. And if we see some major warning signs, then we'll have to adapt and adjust our bias intraday. So those are main ideas heading into the open. Let's see if the buy side can maintain the control and the breakout that we saw from Friday, and we'll take it from there.